Maria Luís Albuquerque, Commissioner for Financial Services and the Savings and Investment Union at the European Commission. Thank you so much for your time. Thank you for speaking to us here on the sidelines of the IMF meeting. Now, you've recently launched the Savings and Investment Unit in the European Union. Why this big push now?
Well, good morning and thanks for having me. We think this is really the right time to complete a project which is not new, but we are giving it a refreshed approach and a more sort of holistic approach. It's about connecting the savings and the investments of the economy. That's just how the name says, because we do have a lot of savings in Europe. Many of those savings, much of those savings are just sitting idle in bank deposits, and at the same time we need those resources to be channeled to the economy. So to the advantages of both sides, both those who save, who should have a higher and better return on their savings, long-term savings mostly, and the needs of investment in the economy, we really need to connect this. So we need to bring about a true single market in financial services, because there are still too many barriers remaining, and we are not really taking advantage of having a full single market which would unlock immense growth potential in the economy.
This is always something that strikes me and you and everyone in Europe. The savings are there, the wealth is there, but it's not channeled in the right direction. Why? What have been the impediments so far?
Well, people tend to say that we do not have a risk culture and that is what is preventing us from investing. I always say that people always react to incentives. So if the European savers are not putting their money to work in the way that would benefit them the most, is probably because they do not have the right opportunities or the right incentives. So it's about creating those incentives for the retail investors. It's about obviously working on financial literacy, getting information to people, allowing them to make better informed decisions, to build better financial futures for themselves, and at the same time, by channeling those savings through the capital markets, they will actually allow companies to access funds, because they don't need only loans from the banks, they also need equity. That is what we are most in need of, and that is what this project has the potential to do. And the barriers are many. We have economic barriers, we have legal barriers, we have some vested interest in certain member states. We have an attitude which tends to be sometimes protectionist and with legitimate concerns, but it is not compatible with actually creating a single market. And the advantages, if we can lower or even tear down all these barriers, are immense. The potential we have in Europe to actually have a deep, efficient, liquid capital market is huge, and we would probably be very, very competitive globally.
Let me pick you up on some of the barriers that you just mentioned. Obviously, nationalist interests really at the top of the list here, I assume. And you've recently made some comments saying that maybe the European Commission has been too diplomatic when it comes to those nationalist interests. What do you mean by that? And are you hoping to be more forceful in the future?
I'm saying, I don't recall exactly saying that in those terms, but I've been calling out on that and saying that, yes, we know that there are some market participants who actually benefit from the status quo because they found themselves a comfortable position with not much competition, and they do not want to engage in some serious change, because that is something that people tend to resist to. The point is that we are not here to cater for those specific interests. We are talking about what is good for Europe as a whole, what is good for the citizens as a whole. And when we talk about the Savings and Investments Union, the end goal would be that all citizens, all businesses would have exactly the same opportunity, no matter where they are in the European Union. So they could be in the east, in the south, in the north, in the center. It shouldn't matter. It shouldn't matter. We should all have the same opportunities wherever we are.
Yet one of the major challenges when it comes to the Savings and Investment Union is, of course, the fact that you have, at the European Commission, you have no authority over national tax matters. So if you want to set the right incentives, how would you do that?
Well, it's not just tax matters, actually. There's a lot more constituting these barriers. which is not under the remit of the Commission. So what we are doing is a combination of different measures. We will be proposing some legislation in areas where the Commission actually has the power to do that. We will be issuing recommendations to Member States on the areas where we have no powers. Taxation is one of them. Also on pension systems. The pensions is also a very important part of the whole project, because it is the most efficient and effective way of actually channeling retail savings into the capital markets, and that is something that we can also not legislate on. So we'll be putting recommendations, and we will be using the European semester and the country-specific recommendations to also be able to monitor and to incentivize member states to come forward with such measures. And it's also about explaining why this is a good project, why this is important for everyone. And I think that it is now we do see a change of attitude, because the Draghi report and the Letta report, I think they were very important in making people realize how important it is to actually create one single capital market in the European Union. And now the current circumstances also made it urgent. So if we have the importance and the urgency, I think we can have enough political momentum to actually do things that will be difficult and challenging. Agreed.
You say there's been a wake-up call from the Letta report, from the Draghi report, and certainly reading between the lines, definitely also from the current Trump administration and the trade war and the sort of the undoing of the defense relationship between Europe and the U.S. Let me ask you, though, in the face of this, we've seen all this capital flowing into Europe. The euro against the U.S. dollar is at a 3-year high. We see all these inflows into the equity markets. How do we keep that money in Europe? How do we make it stay?
What we are seeing now, and it's important also to make this distinction, is portfolio investment, which is important because it will help valuations, so it will increase the interest for investment in the European Union. But the Savings and Investments Union, it's an enabler. So we are trying to get the money to flow where there is a good business case. But we have a whole series of other measures in many other areas that will actually create this economic dynamism, if I can put it like that. So we are talking about investing in defense. We're talking about innovation. We're talking about creating the right conditions for our startups to become scale-ups and to become big companies within Europe. So all these other strategies that we are putting in place, looking at our competitiveness compass, we do have sort of a roadmap of what needs to be done. Those measures being implemented, the Savings and Investments Union will help the private capital flow into that. So, of course, we welcome the interest that Europe has now, which is the fact that we are seen as reliable, predictable, and that is important. It is, however, portfolio investment. We need to see investment in the real economy as well. But this is also helping, of course, because it makes our valuations increase, which I believe we're actually quite below the fundamentals. So maybe things are sort of being more balanced now.
Finally, what is the investment case for Europe? Where do you want European savers to invest? You mentioned defense before.
Yes.
What other sectors?
Well, we need to invest across the board because we have the challenge of the climate transition. So most of our companies, the bulk of our companies, are transitioning to become more sustainable, and they need investment to do that. To grow, we keep saying that we have lots of SMEs, which is great, but the objective of an SME is to become a big company one day, so we need financing to help them grow. And when it comes to specific areas, we need to invest a lot in innovation, we need artificial intelligence, we need all those sort of leading strategies for the future, and defense and security. Not only because defense is a common public good, we realize it is important that we take care of our own defense, but also defense and security has a huge potential for innovation. Lots of the things that we use on our daily lives and that are used in industry actually came from research in defense in the past. So it has the potential not only to deliver the public good that we all need, but also to be very important economically and to allow for a reindustrialization of Europe. We have the funds, we have the skills, we have the needs, and I think now we have the political will. So I actually think that Europe has a very significant opportunity to recover from the lag we still have on competitiveness and actually make a much better future for all of us.